Hey, recently I was asked a question and it was, I'm getting ready to start a business. Should I set my LLC up first before starting the business? And I answered it on TikTok, but I thought I would do a longer video here to kind of go over the differences between an LLC, a C corporation, a partnership, and how to apply an S-election to either your C Corp or your LLC. So an LLC is what's known as a pass-through entity. So is a partnership. And what that means is the profit, after you've taken all of the deductions for the business, you pay for all the liabilities, the expenses, the profit passes through to the shareholders or directors, members of the LLC, partnership, or the C Corp, or the corporation, I should say. So it's a pass-through, which means LLCs and partnerships do absolutely nothing to reduce your income taxes. Nothing. So if you set up an LLC thinking, oh, it's going to save me thousands of dollars on my taxes, you're wrong, my friend, because LLCs pass through. Now, what can you do with an LLC to save money on taxes? Well, you could file for an S-election, and what that means is it's now taxed as an S corporation. Now, I didn't say that earlier because there's really no such thing as a S corporation. It's just a tax election. And a C Corp can be taxed as an S, as can an LLC. Now, corporations are different than LLCs. See, LLCs have incredible asset protection. So if you're thinking about starting a business, you don't necessarily need to set up the LLC first. If you have no assets, you have no revenue, there's really nothing there to protect. And again, LLCs don't help you with taxes. A C corporation also has asset protection and potentially could save you money in taxes. The problem with a C corporation by itself is double taxation. Now, what does that mean? So, unlike an LLC or a S-election corporation or a partnership, at the end of the year, the profits flow through to the members and shareholders. And so you just pay your individual tax rate on it. A C corporation, the way it works, is money goes in and then it has to be distributed to the directors and the shareholders. And if it's not, there's other taxation on that called the AET or even the PHC tax, which is 20%. So corporate tax right now, as of this recording, Trump has not changed it yet, it's 21%. Hopefully soon it'll be 15%. But right now it's 21%. So if you made $100,000 profit in an LLC, an S-elected corporation, or your partnership, that 100 grand would flow down to the member. And let's say you're a sole member LLC, which is a terrible idea, or a sole member S-elected corporation, which is a terrible idea. But let's say that you didn't know any better and you were a sole member, sole prop LLC, or S-elected corporation, or even if you're a partnership, say you got two partners, 50-50, and you had $100,000 of pure profit. That $100,000 is then going to be sent to you via a K-1 to either the partners in the partnership or to you individually. So if you're a sole member, that $100,000 is going to show up via K-1, and then you're going to pay income tax on that $100,000 profit. Now, if you're an LLC, you're also going to pay 15.3% self-employment tax, which is when the S-election makes sense, because you can actually take that K-1 distribution, Social Security tax free, saving you 15.3. But there is no free lunch with the IRS. So if you do elect to have an S-election, you must also take a reasonable salary. And here's where it gets nasty. If you Google reasonable salary for a CEO in every single state, all 50 states, Google's going to come back and say a reasonable salary for a CEO in your state is over $100,000. So unless you're making a couple $100,000 a year in profit, an S-election is probably going to cost you more than save you. So let's get back to the C Corp. So let's say that $100,000 of profit happened to the C Corp. If you don't distribute it, you're going to pay a 20% fine, essentially, 20% tax. And you're going to pay that tax until you distribute the money. So in a matter of about 4.5 years, let's call it 5 years, simple math, that 100 grand is going to be eaten up via tax. So you have to distribute it. When you distribute it to the directors or the shareholders, they also will have to pay income tax on it. And that's why it's called double taxation. This is bad. And this is why most CPAs, most tax professionals will advise against having a C-Corp. But I'll tell you something. C-Corps are absolutely amazing. They have incredible tax benefits, incredible asset protection. See, an LLC is great for asset protection, horrible for taxes. An S-Corporation is great for taxes, potentially, not so great on asset protection. And then a C-Corp, because of this double taxation, is not really great by itself as an entity, but it has great asset protection. So what if you could merge all of them into one big corporate structure? An LLC that does business with the world, so that owns nothing, has no assets. This way, if that LLC gets sued, there's nothing, and they lose, there's nothing to take because the LLC is simply just a holding company, or not a holding company. It's just a working company. It's the operating company. It doesn't have assets. And what if the majority shareholder of that LLC was a holding LLC in a state where even if you get sued, they can't attach to your bank account, they can't levy your bank account, they can't take your assets, they can't force you to do anything at all. That's right, there are states like that. What if you made that LLC owned by a C-Corp? So now, remember, the LLC's passed through. Now you have all the profits passing up to your C-Corp. Why would you want to do that? Because instead of paying up to 37% federal tax, 15.3 self-employment tax, and then your state, I live here in Idaho, so my state tax is around 6%. So if I was going to make, say, $300,000 as an individual, as a LLC or a partnership, I would pay 37 plus 15, so that's 52% plus 6. I'd pay 58% tax on the first $160,000. And then after that, I pay around 43% above $160,000. That's disgusting. Why would anybody want to do that? Why would your CPAs not tell you about the C-Corp structure? It's one word. One word. Ignorance. It's because they're ignorant. It's not that they're stupid. They're ignorant as in they don't know any better. They don't understand the power of a C-Corp. It's ignorance. Now, I'm a very ignorant person when it comes to building rockets and sending people into outer space. I'm a very ignorant person when it comes to, building an engine. I know how it works, but that's not my specialty. My specialty is tax and credit and a little bit of real estate. But there are far more people out there a lot smarter than I am when it comes to the majority of the world. So I'm very ignorant when it comes to certain things and very intelligent and educated and also known as a specialist or a strategist when it comes to credit and taxes and debt. That is my expertise. So when I say that the CPAs, the tax preparers, are ignorant, it's not a derogatory term. It's just they're uneducated. So why wouldn't they have it go to the C-Corp? Here's why. Double taxation. See, they don't know how the Uniform Commercial Code works that allows you to keep the money in the LLC, let the C-Corp pay the taxes at a flat rate of 21%, no state income tax, no self-employment tax, and you're capped at 21% versus 50+%. If you live in California and you make over $1 million a year, your tax rate is over 60%. 60%. So if you make $1 million, you're going to take home $400,000. That's absolutely disgusting. And what do they do with that money in California? Well, they're definitely not putting it in the fire departments. They're not putting it in the roads. They're not spending it on the schools. So what are they spending it on? They're spending it on stupid, woke ideologies, DEI, and trying to stop Trump from saving the world. That's what they're spending the money on. Why spend all that money? So, an LLC does absolutely nothing for you when it comes to taxes. A partnership is great, but it doesn't save you money on taxes. An S-election LLC or S-election C-Corp is great for asset protection and good for taxes, but it's not the best by itself because of the reasonable salary that you have to take out. You got to pay an extra 15.3% tax, gross. And then the C-Corp by itself is no good because of double taxation. But if you combine those three structures together, an LLC with an S-elected corp or LLC, S-election, and a C-Corp in one corporate structure, you, my friend, are winning. And if you like winning and you want to have a free consultation with me where I could show you how to do this yourself, then comment on this video taxes. That'll take you over to my appointment calendar. And then you can just grab some time with me. Happy to show you how this works. No cost. Now, I can't spend hours with you, but I can give you another 15, 20 minutes just to go over the structure and show you how you and your family can save tens of thousands, if not hundreds of thousands, potentially millions of dollars. So if you would like a structure that wins when it comes to the tax game, comment on this video with the word taxes, and I'll send you my calendar invite. Hope you have a great day.